gentlemen, welcome back to another hopefully great week for Tesla stock. Question is, does the short squeeze that we seen last week continue this week? If it does, Tesla could be hitting new all-time highs, potentially by the end of this week. Now, here in this video, I will give you the latest details of everything you need to know specifically in regards to Tesla. We will also obviously go over option activity, short interest, positioning for this week, sentiment barometers that have to do specifically with Tesla. But look at this, Bitcoin is up 1.88% in the last 24 hours, hitting a new all-time high of $81,165 just about an hour or two ago. Bitcoin is continuing its rally. This is a risk-on asset that has a heavy correlation with Tesla. When Bitcoin does well, Tesla tends to do well. When Bitcoin does well, generally speaking, risk-on assets tend to also do well. This is biopharma. These are small caps. These days, that's also the Dow, which is an economically sensitive index. So here in this video, I will explain everything you need to know, briefly give you a look at the earnings for this week, as well as the economic calendar, your biggest events, when they will take place, and what you need to know in regards to them. So first and foremost, let's kick this video off with Tesla. Tesla stock was up 8.19% on Friday, up 0.5% in after-hours trading. Tesla stock had a high on Friday of $328.71, closing the day at $322.79 per share. That's a breakout, about as clean of a breakout as you could possibly get. We not only broke above $300 per share, we soared above $300 per share. So good news is, if we do see any downside or consolidation over the next coming weeks, which does not look likely, at least for this week, to start the week, I shall say, $300 per share is gonna be your support level. I would highly doubt the stock breaks under 300 from this point on until we get the next correction, because as you'll see in a moment, there's a lot of bullish positioning in Tesla, and there's a lot of shorts that are getting completely blown out of their short positions, and we've only seen a small baby little fraction of shorts actually cover on their short positions. Now, if this is your first time to the channel in a while, consider sticking around, because we're keeping you guys updated by the second, by the hour, by the minute, by the day and the week, and of course the month, what's going on with Tesla. Okay, if you're just getting here, there's multiple different things that are currently affecting Tesla. Okay, there's the Trump tariff situation, which Tesla's really a standout here, because think about it like this. If you buy a Tesla in America, it was built in America. If you buy a Tesla in China, it was built in China. If you buy a Tesla in Europe, it was most likely built in Europe. If not, it was built in China. In other words, Tesla has already kind of solved the whole tariff problem in and of themselves. They've kind of, in a way, been prepared for any kind of US-based tariffs, specifically in regards to China. So Tesla is not hurt at all by any potential tariff implications, which makes Tesla kind of a standout, because some companies have a lot of exposure to potential tariff problems. Some companies have very little. Tesla's in that rare group that really has no connection to the tariffs whatsoever that could potentially come. So if you're thinking about headwinds, that's not a thing for Tesla. Elon Musk is also very close with Trump. Their relationship has grown closer in recent weeks and months, and there's not likely going to be any significant policies that hurt Tesla. There could be policies that hurt Tesla's competition, as Elon Musk has said before, but not really anything that's going to hurt Tesla. So those are two very distinct positive things we have going for Tesla right now. You also have earnings season that pretty much wrapped up with your big tech names. Yes, there's more earnings this week. A couple more notable names as well, like Home Depot. We'll look at that in just a moment. But by and large, earnings came in, and they came in good. As you can see here, S&P 500 Q3 EPS grew 8% year over year versus the expected 3%. So yes, expectations were low heading into this earnings season, but earnings did come in good. Now the expectation for next quarter is 9%, and the first quarter of 2023 is 12%. Now for Q1, you're really comparing a 1% earnings growth in Q1 of 2024. So it's not that crazy of expectations to go to 9% because Q1 2024 was 1%. And of course, hopefully Q1 2025, 12%. That's really not that crazy. It gets more difficult when you're looking at like Q4 of 2025, where you're expecting 17% earnings growth versus Q4 of 2024, this quarter that we are in, where you're already expecting 9% growth. So if we can put up those numbers in 2025, longer term, yeah, markets are going to go much higher. Odds are estimates will come down, and as you've seen via Q3, the quarter that we're just getting reported, expectations plummeted 2 weeks before earnings came in. Markets did not. So it doesn't always correlate with downside in markets when earnings estimates do fall. A lot of the time it does, but not all of the time. We've seen that with this quarter earnings season. With that said, we have Trump now going to be the 47th president of America, which will likely bring in lower inflation despite what Wall Street currently thinks, and this will allow the Fed to cut rates more than Wall Street is currently expecting. This is a tailwind catalyst for markets. Again, something we're not really expecting that could come in and fuel more upside for markets, especially your risk on areas. That's something to be continued, something to watch out for. We just got the Fed, which basically sounds like they're not concerned about inflation at all. They're not concerned about tariff policies or any government policies until they actually happen. That's another positive for markets. And we're heading into seasonally the best 2 months of the year for markets, especially during election years, in which you do tend to post about a 6 to 7% gain from now until year end. So these are all very positive things currently going for markets. The only thing I can really see right now that's negative, besides any political headlines that we may get that could spook markets, is economic data and inflation. If inflation data this upcoming week comes in bad, that's a problem. If it comes in good, that's good. If we get weakening economic data as far as the broader economy with, let's say, retail sales on Friday of this upcoming week, that's not going to be good either. I do believe at some point in early to mid 2025, you will get a pretty dramatic correction in markets, 10 to 15%, downside that is, when the markets kind of get fearful about the economy again. Right now, we've all put in our bets for a soft landing. I think it's far too soon to do that, and I think the economy is going to go up and down. There's going to be bumps along the way, even if we do achieve a soft landing. And currently, markets are not priced for a hard landing. So any kind of chance of a hard landing is going to be seen as a negative for markets. Now, I don't think that is going to happen between now and year end. I think the odds of that are fairly low, just given we got a bunch of economic data out the way. And really after this week, we're not going to get more economic data until December. Okay, and at that point, as long as it's not terrible, the animal spirits in the markets will probably take over. Now, in terms of, again, Tesla stock, Tesla is in a very unique place because not many companies have so much going for them like Tesla. If you even think about the longer term potential of Tesla, if we do enter into a stronger economy, if we enter into maybe lower rates, keep in mind the Fed is still cutting rates, and 10-year Treasury yields potentially could fall from here, as Jerome Powell alluded to, you could start to look out further for Tesla's growth prospects and say, maybe Tesla at all-time highs, $400 so per share, is not a terrible investment considering how much growth Tesla has ahead of it. Elon Musk just signaled 20 to 30% delivery growth for next year. FSD, I mean, that continues to improve. Robotaxis coming by the end of 2025, and Optimus is coming likely in larger numbers in 2026 and 2027. There's a long tailwind of growth ahead for Tesla, and depending on your time horizon, it could make sense to buy Tesla here. If you have a 3-year time horizon, a relatively short time horizon, you could even justify buying Tesla here at these levels. Now, if you have a 6-month time horizon, then maybe it's harder to fundamentally justify Tesla. If you have a 5 or 10-year outlook, which most investors do, then you can easily make a case to own Tesla and make a case for pretty large upside from here. And that's another reason why I do believe the shorts are likely to get squeezed. Now, we'll look at positioning here in just a moment, short interest options, all of that. But from a purely technical perspective, as I talked about in the last video, Tesla's RSI is at 76.33, which is technically overbought. But normally when you get overbought on Tesla, you normally see the RSI go to the mid or high 80s. So from that perspective, there's still a couple more really good days left in the tank for Tesla. And it seems like that's probably what is going to happen. Now, keep in mind, Tesla has went up 29.01% in the past week. So there will be some consolidation, there will be some sideways trading, maybe some slight downwards trading in the coming days, but I do think by next Friday, Tesla stock will be higher than where it started the week, if not surely over the next couple of weeks. Now, option activity for Friday was incredibly positive. You had 725 different trades totaling $1.16 billion with a positive order value of 90%. That is a 90% positive order value. That's insane for option activity from hedge funds and institutions, mind you. This is not retail investors. These are hedge funds, institutions that tend to be more negative than retail on Tesla. So if big money's positive, retail is likely really positive. And that is definitely great news for a potential continuation in Tesla. On Friday, as I previously reported, you had 950,000 shares that were covered on. Return shares, 2.18 million. Borrowed shares, 1.23 million. The dollar amount currently sold short in Tesla is about $25.5 billion, including the loss that shorts faced on Friday. You have 2.84% short interest up free float, which doesn't sound like a lot, but when you're almost 3% of the float sold short on a over $1 trillion company, now Tesla's over $1 trillion, that is massive. That is unlike anything you see on any other big tech stocks. You currently have 79.22 million shares that are sold short, and days to cover is 1 day. So what that means is all of these shorts in Tesla, 79.22 million shares, could be covered in a single day if they wanted to. Now that would cause Tesla to go up like 50% in a day. That would be insane. That's not going to happen. But there is the ability to cover on your short position if you are a short whenever you want to, because there is high volume and high liquidity right now. And that is another reason why I think you are vulnerable for a larger upside squeeze in Tesla stock. Now, keep in mind, yes, there is a fundamental way that you could justify what's happening to Tesla right now. And I think Tesla probably should have gotten more credit sooner. I think this is more of a corrective phase for Tesla, pricing in what should have already been priced in. If we get that larger squeeze though from this point, it looks more like a squeeze to me. Okay, price action wise, it looks like a squeeze already, but you can make a pretty strong fundamental justifiable case for Tesla's price action so far. If it rallies more, just keep this in mind. Short squeezes, they go up a lot and they come down a lot and they get very volatile. And the stock's not going to settle out in just one place in a day or two of trading, okay? It's going to take some time after the squeeze to really level out and then figure out where Tesla's going to base from there. Does Tesla base where we are now at 330? Roughly. Does it base at 350? Does it rally to 450 and then come down to 400 and find a good base around there? A lot of things are going to affect that number, where we ultimately start to settle out at, but eventually this settling out will occur. Question is, does it happen as the stock is much higher than where it is today, or does it happen, maybe just a little bit higher? That is something I do not have an answer to. If we take a look at stock twits for Tesla, sentiment today is bullish at 56, but not that bullish. Not as bullish as you would think, given Tesla has went up a lot recently. On Friday, you were bullish at 58, so you've actually fallen a little bit for today, which today is Sunday. Just leads me to believe there's more upside left. When you start to get into extremely bullish territory, like 80 plus, then we'll talk about maybe sentiment getting a little too optimistic. Message volume is low at 41. Yesterday was normal at 49. And the participation ratio today is high at 56. With that said, for the week ahead, the most active option for last week, for this upcoming week, for the for the expiration of November 15th, 2024 was the 320 call, where you have open interest of 45,000 and volume on Friday of 117,000. Now, Tesla broke above 320 in a sizable way. So you did have a bit of a gamma squeeze as well on Friday. That's likely going to continue the longer Tesla stays above 320. The more and more of those option buyers that bought the 320 calls last week that start to go positive on their positions. When you start to go positive, that means market makers, they have to go out and buy Tesla stock because they have to give it to you at 320. So then buying more Tesla stock helps fuel that upside. Now, if we get to 350, that's another big expiration. With open interest of 16,000 and volume of 92,000. The 325 has open interest of 19,000 and volume of 64,000. And the 310 call, again, has volume of 82,000, open interest of about 16,000. Even the $400 call seen a lot of activity as well for this Friday's expiration. That was last week, of course. The $400 call, open interest 8,400 and volume of 49,000. We do want to see how much of this volume translates into open interest, because those numbers will get calculated coming tomorrow morning. If we see more open interest than where we're at now, that's a good sign of continued bets for Tesla to go higher. But just look at the size of the green circles, which is the larger the circle is showing you more open interest, right? More volume compared to the red ones. Like, the red ones are tiny in relation to the calls, the green ones here. There's a lot more upside positioning in Tesla than downside positioning. So I think when we add all of these things together, you can come to a pretty conclusion that the momentum is probably going to continue to send Tesla stock higher. Now, again, there's a fair point to be made that this is justifiable, that maybe Tesla should have been higher already, given the guidance that we got for next year, given FSD and Robotaxi for next year, Optimus coming in the not so distant future. Like, there's a lot of reasons to be positive fundamentally on Tesla as well, which helps to justify the momentum. And that's why I believe the last couple of days have not just been a short squeeze in and of itself, but a short squeeze is really the symptom or causation of the larger kind of reason to own Tesla to begin with. So with that said, let me know what you think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.